Hi, how are you? You open this because you want to learn something, right? This video will discuss you. It's fundamental so that you will easily understand the basics of accounting. So let's start! Accounting is a service activity. Its primary function is to provide a quantitative information that is intended to be useful in making recent choices among alternative courses of action. Accounting is very important courses because all businesses needs accounting service from an expert. Accounting needs an extra effort for you to understand. Many students say accounting is a tough one, but if you give effort to understand it, then congratulations, you win the battle. Before we start the lesson, let's give you an ample view with regards to accounting. Number 1, accounting is such a tough job. So before you prepare your financial statement, you need to collate all receipts, record it with journal entries, general ledger, trial balance, etc. Number 2, you need to understand the importance of debit and credit. Number 3, you need to understand what is asset, liabilities, capital, revenue, and expenses. Number 4 is you need to understand what's the meaning of invested capital. And number 5, you need to understand what's the business, owe, company's obligation, and its expenditures. So are you ready now? I hope you are. So let's study one by one the basics of accounting. So let's start. So number 1 is we have the A or the asset. So asset, it is what the company owns. So the original entry of asset is always the debit side. So asset increases capital account. So asset is a real account and it is part of a balance sheet. So assets are divided into current assets, non-current assets, and intangible assets. So current assets are the following. So we have here the examples. The number 1 is the cash. So we have cash on hand, cash in bank, and petty cash fund. And then we have the accounts receivable, the loans receivable, the notes receivable short term. And then we have the merchandise inventory. So it can be raw materials inventory, the merchandise inventory itself. So we have the work in process inventory and finished goods inventory. Then we have the office supplies. As long as it is not yet used, then it is part of the asset. So it's office supplies. If it is already used, then we can call it as office supplies expense. The number 5 that we have is the prepaid expenses. So all prepaid expenses are part of the current assets because they are not yet used. And it should be put into your current asset. Okay. So we have the non-current assets. We have 3 non-current assets. We have the land, the building, and the equipment. So when we say land, it is also called as the property, which is the P. And the building is also called as the plant or the PPE and equipment. So equipment are divided into different aspects. So we can call it as machineries, large equipment, and then vehicle is also part of the equipment. As an equipment, we have office equipment, then we have, and the last one is furniture and fixtures. So the next one that we have is the intangible assets. So they are the following. So we have goodwill, patents, we have copyrights, we have trademarks, and we have franchise. So those are example of intangible assets. Next that we have, or the next account that we have, is what we call as the L or liabilities. So when we say liabilities, it is what the company owes or the obligation of the company. So original entry of liabilities is credit side. So when you say liabilities, it decreases capital account. Liabilities is a real account and also part of balance sheet. Liabilities are divided into the current liabilities and non-current liabilities. So we have current liabilities are the following. We have accounts payable, notes payable short-term, interest payable, rent payable, income tax payable, insurance payable, loans payable, short-term, and then we have accrued expenses, etc. So those that are obligation of the company and it is short-term, or meaning to say they can pay it within the span of 1 year, then we call it a short-term payable. Next is we have the non-current liabilities. So we have the following example here. We have the stockholders payable, the notes payable long-term, we have the bonds payable, we have other payables that will be paid more than 2 years. So we call it as the non-current liabilities or the long-term payable. Next that we have is the letter C. So C means capital. So capital, it is what the company invests, or it is the money provided in order to operate the business. So original entry of capital is credit side. So capital increases beginning capital account. So capital is a real account and also part of balance sheet. So capital are categorized differently based on the types of business. For example, if your business is a sole proprietorship, then you can call your capital as owner's capital or owner's equity. So if the business is a partnership business, then you can call it as the partner's capital or partner's equity. If the capital is sole proprietorship or partnership, then we can be recorded it as follows. So we have the beginning capital. So we add here the net income came from the income statement. Then we deduct the withdrawal, or what we call as the drawings, for the personal account deducted by the owner to the business. And then upon getting the adding the net income less the withdrawal, so we have the ending capital. So this ending capital will be recorded on your balance sheet. So if it is a manufacturing, an incorporation, or a corporation business, then you can call it as stockholders equity. So capital also means stockholders equity. So if the capital is a manufacturing, incorporation, or a corporation, then we can be recorded it as follows. So we have the total stockholders equity. So the stockholders equity, which is also means capital, so we will provide here. And then we have another account which is the retained earnings beginning, add the net income. So instead of adding it to the capital, we add it to the retained earnings beginning. And then we have the retained earnings end. So capital, add the retained earnings end. Also add the common stock par value and the preferred stock par value. So these four will be part of your total stockholders equity or total capital. Okay, next that we have is the letter R, or the revenue. So revenue means the gross income. So revenue, it is what the company earns. So original entry of revenue is credit side. So when you say revenue, it increases capital account. So example here is when we have sales, so we debit cash, credit sales or revenue. So it increases the capital account. So revenue is a nominal account. So meaning to say at the end of the year, it will be back to zero. And also revenue is also part of the income statement. So revenue are categorized differently based on the type of business. So example, if it is a merchandising business, then you call your revenue as sales. Okay, so sales minus cost of sales is equals to gross profit minus operating expenses is equals to operating income. Then, if it is a service business, then you code it as a service income. So, if the business is just like a spa, barber shop, or more on services, so we called it as service income. Then next is, if it is a manufacturing business, then you can code it as either sales or revenue. But if it is an incorporation or corporation, then you code it as revenue. Okay, so sales, service income, gross income, or revenue are the same. Next is we have the E, or the expenses or expenditure. So expenses is what the company use, purchase, or expense. So original entry of expense is debit sign. So expenses decreases capital account. Expenses is a nominal account and a part of income statement. So this one is a nominal account, meaning to say at the end of the year, it will bring back with the zero account. So if the business is simply a service business, it is categorized as operating expenses. So example is salaries, rent expense, communication expense, utilities, so Meralco and water utilities. So it is part of utility expense. Then we have the allowances, the transportation, the gas and oil, the insurance expense, the interest expense, the notarial fee, the professional fee, etc. Then all government payment, which is the SSS contribution, the PhilHealth contribution, and Pag-ibig contribution are also part of operating expenses. If the business is a merchandising business, whether it's small or large business, it is categorized under cost of sales, selling, and administrative expenses. Anyway, they are all part of operating expenses. Next is, if the business is a manufacturing business, whether it's small or large business, it is categorized under cost of sales, selling, and administrative expense. But we need to consider the following: the word direct labor, which is also part of the cost of sale, the direct materials, the factory overhead, the inventories, which is the raw materials inventory, the work in process inventory, and the finished goods inventory. So you only use these accounts when your business is a manufacturing business. This is the end of our discussion, and I'm just hoping you understand the fundamentals or the basics of accounting. So this is only part 1, and we have another part, which is part 2. And I hope you will learn something from me. And after this, you can discuss easily the basics of accounting. Again, this is Think Tank like this. Bye-bye.